Nippon India Mutual Fund has announced it will not accept lump sum investments in one of its schemes, Nippon India Smallcap Fund, from today. And earlier we saw Tata Smallcap too had announced that it would be stopping they will stop accepting lump sum investments in Tata Small Cap Fund. Now, over the last few months, what we've seen is that small cap space has been has seen higher than usual inflows owing to its good performance. So, why are AMCs halting lump sum investments into small cap funds? And if you are an investor in one of these funds, should you be concerned? Let's get all of this answered. We have Anand Varadarajan, Business Head, Banking Institutional Sales, Alternate Products and Product Strategy, Tata AMC, and Arnav Pandya, founder Moneyeduschool. Good evening and welcome to the show. So Arnav, let's get the background clear. What is actually making these AMCs stop lump sum investments in their small cap funds? Is it the overheating of this particular sector and the valuation which have reached on a higher level?
Good evening, Kavita. So there are different factors which different AMCs might look at while they are deciding on whether they want to stop the lump sum investment into their small cap schemes. But normally what one sees is that one is that when the AUM of the small cap fund, for example, goes too high, then it might become difficult for the fund manager to deploy the funds, and that can be a reason why they might want to restrict larger amounts in the form of lump sums, while they might continue with the systematic investment and systematic transfer plan. Another thing which also might happen and which normally happens is that when there is a sharp run up in the market, and then especially in the mid and the small cap segment, one finds that the valuation for these kind of companies has gone too high. And in that case, the fund manager would not want to be forced to invest at these kind of high valuations. So a way in which they would want to restrict this kind of choice is by ensuring that new inflows are restricted through the lump sum. And the third and final factor which most fund houses and fund managers keep in mind is also the fact that they need to protect the investors who are already in the fund, because many times, say, even if they accept these kind of new investments, they are not able to deploy it effectively, or then there is a sudden impact on the mid and small cap segment of the market. The existing investors might suffer either in terms of underperformance, or they might see a sharp fall in the net asset value. So to prevent all these, they often ensure that this kind of flows are restricted. So overall, I mean, it can be a mix of these factors. It can be one of these factors. It depends from fund house to fund house.
Exactly. So what's the reason, what's the factor behind Tata Small Cap Fund? Anand, what will you say? And then is it just lump sum investment that's been halted, or is it also the SIP or STP? Could you please explain that?
Okay, our reason, like Mr. Pandya highlighted, there were three reasons that he mentioned. Our reason is the third one, which was to do with ensuring that our existing investors and new investors have a good investment experience with their investments in Tata Small Cap. I think there are three things that we need to look at when we are buying small caps as a portfolio manager. I think the challenges are that you need to have you need to find a stock which you want to invest into. You need to get reasonable amount of quantity, and you need to get it at a price that you want to invest at. I think lately, because of so first things first, let me also mention in the same breath that we are very constructive on small caps as a category. It's not that we are not finding opportunities. I think the three reasons that I mentioned in terms of the stock, quantity, and price have to come together for us to make an investment. Sometimes, you find these three things coming together. Sometimes it takes time. And if your performance is strong, if you continue to get strong inflows, what happens is your cash levels in the portfolio starts going up. And you may take time to deploy, because all the other three things in terms of finding the right opportunity and at a price that you wish to invest may not be coming simultaneously. So we thought it was perhaps prudent to slow down the flows and allowing only SIP investors to invest in the fund, and stop lump sum investments in the small cap fund. So it just slows down the flow, and you also get more time to deploy. You are not in any rush to deploy all the money at one go. Our cash levels in the fund had gone up, and we thought we wanted more time to deploy before we start, thinking of reopening, etc.
So, Anand, all right. So Anand, what is the current cash level on which you are sitting?
So we'll be about 14%, 14-15% in the fund roughly.
All right, all right. Arnav, I also want you to help our viewers understand that why lump sum investments and why not halting SIP and STP investments? How does this impact the fund manager's strategy to deploy money into the specific sector and stocks?
So if you look at the very nature of the flows, mostly when we are seeing investors undertake systematic investment plans or systematic transfer plans, the amount which they put in are relatively smaller in size. And the other main point is that they are regular, and there is an idea of when the kind of flows that the fund will receive, because the data is already available in terms of what kind of SIPs come on which dates during the month which the fund house allows. So that is one thing. The other thing is that when you look at lump sums, first of all, they are slightly larger in size. But even more, what one sees is that whenever there is this kind of trend in the equity market, so like for example, when there is a rally going on or you are hitting new highs, and when there is extra interest in the mid and small cap space, then the rush of investors towards these fund increases more than what you normally see. So larger amounts which come into the lump sum through the lump sum route, plus the fact that they are bolstered during these times, could result wherein fund houses actually get a large amount of their total inflows through the lump sum route, which might not be at the right thing for them to deploy. So which is why they would want to restrict this flow first, and that is what is normally seen.
Anand, now having said that, now since you've explained the entire structure of the fund and also the kind of wait and watch situation that we are looking at, explain us as to in terms of increasing the investment amount, even from an SIP point of view, would that really make sense for an investor now, or you think that one should just stick with the SIP amount that's been done right now?
So if you look at the whole matter from an investor's perspective, just because there is a certain condition in the market, that is no reason for you to change your plan. So every investor is actually putting in some money based on some requirement which they have. So say for example, you are an investor, you are investing say 1,000 or say 2,000 rupees through the SIP route in the small cap fund. Then this is most likely to be part of an overall allocation, because there will be SIPs going into other funds also, other categories of fund. So just because the small cap segment is doing well doesn't mean that you have to increase the SIP or make changes therein. As an investor, stick to what your allocation plan is. Do not just become overweight, because see, at some point of time every investor will have to rebalance their portfolio. And what is also seen is that in the small and the mid cap space, when there is this kind of rally, the gains are significant. So that by itself will boost the proportion, or rather the weightage of these funds into the overall portfolio. And that by itself should be a factor when you consider rebalancing. But increasing it just because of the trend is not a viable or a suitable idea. Stick to your plan and also rebalance at the appropriate time. That's the most important factor.
Anand? Anand, can you hear me?
Yes, now I can.
All right. So your view on the same question?
Yeah, I think there is no limitation in terms of SIP amount, and I really think this should not be a trigger for increasing or decreasing your investments in any fund. And I think one has to be mindful of what kind of allocation you want to make into small cap as a category, and stay the course rather than really looking at cash levels or some of these tactical kind of situations which may arise from time to time in a fund. I think one has to really look at it from a long-term perspective, because that's what would matter.
Quickly, I want to wrap up this discussion, but then Arnav, this should also not be the time when you just look at the small cap fund's performance and decide to start an SIP. I mean, just looking at the current performance should not be the reason why you want to invest in a particular fund and, have them aligned to your goal. What do you have to say?
No, that is the right thing, because if you look at the performance of small cap funds over a 1, 3, or even a 5-year period at the current juncture, you will find that they have done exceedingly well. In fact, they will seem to be better than many other categories or most other categories also. But that by itself is not the reason why you should be investing in a small cap fund. As I said before, allocation to small caps in your portfolio depends on what is your requirement and what is that you seek to achieve with the overall portfolio, how much weightage you can give to this kind of category, because along with these kind of returns, you also have to consider the risk element which is there. So based on your allocation itself is the decision for you to make as to how much goes there, not all these other factors, and that is what should be at the forefront while you're making your call.
All right, that will be all. Thank you so much, Anand and Arnav, for being on the show and helping our viewers with their small cap fund investment strategy. On that note, we'll take a quick break, but then after that, let's talk about Senior Citizen Act and the kind of protection senior citizens get through this act after this break.